Hello, everyone, and welcome back to the Markets in Focus webinar. I'm Razan Hilal, Market Analyst with Forex.com, live from Dubai. Today is March 24, 2026. I'm going to be running this 1 minute disclaimer in the background for compliance purposes before we go over key markets in focus as a result of the escalating Middle East conflict and the escalating tensions leading up to a potential resolution or ceasefire deal between the US and Iran. So we'll be starting first with the Bitcoin chart as one of the leading measures for risk appetite in the markets, followed by the US dollar index as well as a barometer for the global currency market, and of course, as it reflects also the expectations for central banks and their rate policies as a result of inflation risks from the stickiness of crude oil prices near the $100 mark. After that, we'll be going through the crude oil chart as it is also one of the key leaders right now amid this Middle East conflict, followed by the analysis on precious metals, gold and silver, which are taking deep hits and drawdown risks as a result of these inflationary pressures and the Middle East conflict. And last but not least, of course, the US indices with NASDaq and Dow Jones, as they are also tracing steep downtrends and with risks also building up to the downside as a result of this conflict. So, as I mentioned, we'll be starting with the Bitcoin chart just to assess the risk appetite of the market from the lens of cryptocurrencies. So, we currently have the Bitcoin still holding above the 60,000 mark, which is the neutral to bullish setup that we've been talking about in the past webinars, given the strong confluence zone over here for the 60,000 zone, aligning with the golden 618 Fibonacci retracement of the uptrend between 2022 and 2026. It also aligns with the full pattern potential target of that wedge extending between November and January, also aligning with the highs of 2021, and it also aligns with oversold levels last seen in 2022 when Bitcoin was just near the 15,000 mark. So, given the strong confluence zone near the 60,000 mark, we still have a Bitcoin on a neutral to bullish hold, yet it is still challenging the 75,000 mark as a result of the heavy weight of market sentiment from the Middle East conflict. So, given that scenario, we might have a potential or risks building for another leg lower in line with the scenario, also in line with major market assets, including precious metals and US indices. If we do manage to have a clean close below the 60,000 mark, we can be looking at the support zone that extended on the charts across March 2024 through September 2024. So we'd be looking at the 58,000 zone, the 56,000. A close below that extends the bearish forecast down towards the 48,000 mark for potential high likelihood for a dip buying opportunity. If not, the extreme case scenario would go down to 38, yet the higher chances are near the 48,000 mark for distressed and long-term buying opportunities for the Bitcoin chart. Now, from the outside, should we have a close above the 75,000 mark, we can be realigning neutral to bullish forecast near the 85 to the 89,000 zone. A close above the zone realigns prices back with the 100,000 mark. That opens a more decisive long-term bullish forecast for Bitcoin prices back towards the 115, the 130, and further towards the long-term $200,000 expectation for Bitcoin. So, as a quick summary for this chart, we're still holding at a neutral stance given the bearish sentiment and the increasing fear across the markets due to the Middle East conflict. That is for the Bitcoin chart. With respect to the US dollar index, we'll be analyzing this one from the monthly time frame. The view on the DXY on the dollar is still holding. It's still the same as long as we're still respecting the bounds of that uptrending channel since 2008. We still have a general bullish view for the DXY. We're currently challenging this resistance zone here near the 100.50. A close above this level would likely confirm a double bottom pattern for the DXY, which can extend gains towards the 1180 and the 1440 zone. That can also ripple a steep downside risk as well across the broader currency market and, of course, across gold and silver as well. Right now, we're still holding in that consolidation. As if we do manage to close below the bounds of that uptrending, long-term uptrending channel, then we can shift the views towards bearish for the DXY. So far, we're still holding in that long-term bullish structure. Downside level here is below the 96 zone. So that's for the DXY. Jumping towards the crude oil market, which is sort of a barometer in amid this Middle East conflict, given the oil supply disruptions from supply route and from facility strikes. So I'm going to drop down to the 2 week time frame so we can visualize the scenarios we have on the crude oil chart here. As you can see here, we can see the red zone, the gray zone, and the green zone, which align with a bullish forecast, the neutral zone, and bearish forecast for crude oil, in line also with the scenarios related to the opening or the closure of the Strait of Hormuz. So over here, if we do manage to have a clean close for crude oil prices back above the 100 mark, we can be expecting bullish forecasts to extend further back towards the 105 zone, the 110, and back towards the highs seen during the Russia-Ukraine invasion. That is near the 120 zone. Of course, a close above that increases the chances for the broader market expectations for crude climbing to 130 and $150 per barrel. This scenario would be likely be aligned with also a surge in DXY following steeper inflation expectations in the market and steeper drawdowns across major risk assets, US indices, and precious metals. Right now, we're holding neutral to bullish between the green and the gray zone here. As long as we're above the 83 zone, we're still in the gray zone. Over here, closing below this level exposes back the highs of June 2025, which were the highs we reached in last year's Middle East conflict, which are now presenting a resistance for crude oil prices, and that is near the $75 zone. A close below 75 exposes the bearish scenario for crude oil prices back towards the 65 and the 64, lining back with the bounce of that over 2.5-year downtrending channel, also increasing consolidation risks for crude oil prices back within the 67 to the $50 range, in line with the Trump administration's agenda. So far, price action for crude oil is far beyond the goals of the Trump administration. This is for the crude oil chart. Next, with respect to gold and silver, where we've been seeing steep uh, downturns. Now, in the previous webinar, we did mention that gold and silver were hanging on a cliff's edge, right below this trend line connecting consecutive higher lows between February and March 2026. And we saw the extended drawdown past a few market sessions. So we did manage to extend 100% for that three-legged pattern here back near the 4,200 mark. And we also had this head and shoulders pattern on the RSI, which also enhanced the downturn in momentum for gold prices, in line with the steadiness of the US dollar index and the increasing inflationary expectations across the globe. And also, we have this downturn in gold and silver as a momentum rewind for the exponential rally that we saw between 2024 and 2026, in line with profit taking, uh, in line with the profit taking activities that we're seeing on the metals. So over here, if we do manage to have a clean close below 4,200, we can be expecting another drawdown towards 3,900, where we can have another potential dip buying opportunity. If not, we can be expecting another potential steep drop for gold prices, potentially near 1,000 point drop, with the first support level in sight near the 3,500, which was the previous resistance to 5 months across 2025. A clean close above 3,500 opens the way down towards the 3,000 psychological zone that can open the way for long-term distressed buying opportunities for the gold chart. From the upside, we need to clear back the 4,480, 4,680, and 4,840 to go back within the neutral to bullish range. Further above the 5,000 and 5,200 reinforces long-term bullish expectations towards the previously mentioned $6,000 mark and beyond. Now, with respect to the silver chart, we had an also similar scenario. We have a flag pattern over here on the silver, which was hanging, where price action was hanging below this pattern, the previous analysis. And now we did not reach the full pattern potential target yet. We reached near the $60 psychological zone, and with oversold levels last seen in April 2025. Now, silver needs to clear out at the $72 zone and the $78 zone to align back with the bounce of this channel, where we can have another potential pullback near the $85 zone. If not, closing above 85 reinforces medium-term bullish expectations for silver back towards 95 and the $100 zone. A close above 100 reinforces long-term bullish expectations towards the $200 target in line with the $6,000 target previously mentioned on the gold chart. From the downside, should we have a clean close back below the 65 and the $60 zone, we can be expecting silver prices to extend another leg lower towards the 50 to the $48 zone, which aligns with the previous 45-year resistance for for silver prices extending from the 1980s, which are expected to act as potential support and dip buying zone should prices extend that extra leg lower in line with a steep momentum unwind. So that's for gold and silver. Last but not least, as I mentioned, for the US indices, I'm going to jump to the weekly time frame. On this one, we can see Nasdaq potentially forming a double top pattern in line with the pattern that we saw between December 2024 and February 2025, promoted by the tariff risks for 2025. Now, over here, we're hanging on the neckline of that potential double top pattern, with RSI dropping below the 50 neutral zone, which is also adding bearish risks into the market in line with the Middle East conflict fundamentals. The key level here is the 23,500. If we manage to close below this level, we can be expecting another 1,000 point drop for Nasdaq, possibly aligning with the 22,400 and the highs seen between 2024 and 2025, which is near the 21,800 to the 21,200 zone for potential distressed buying, long-term buying opportunity, like the scenario we saw here in April 2025, possibly replicating now into April 2026. From the upside, Nasdaq needs to clear out the 24,500, 24,900, and the 25,400 respectively to realign bullish forecasts back towards the 26,000 and 27,000 long-term bullish expectations. Last chart over here, we have the Dow Jones. I've been flagging the Dow Jones from the beginning of the year as the price action reached and failed to close above the 50,000 zone and above the bounds of that consolidation and potential diagonal over here we have on the chart that has been forming following the rebound from the 2020 lows. Now over here we can see the price action aligned with the highs of 2024, which is a strong support zone for the price action near the 45,000 zone. A close below this level extends bearish forecasts down towards the lower border of that consolidation first, which is near the 43,100 and 41,900 for potential dip buying. If not, if we close below this bound, we can be expecting price action to revisit the low seen in April 2025 between the 39,000 and 36,000 zone. Now, this is an extreme and distressed scenario for the Dow Jones, but in case we do manage to close below these levels, we can be expecting this downside potential before another reversal for the long-term bullish forecast on the Dow. On the upside, we can be looking at the 46,500, the 47,200 for medium bullish outlook, and closing above the 48,900 would realign long-term bullish forecast back towards 50,000 and beyond for the Dow Jones. These are my key levels for this week and amid this Middle East conflict. It's very important to look at long-term key levels amid the extreme swinging headlines and sentiment that we're seeing on the markets to avoid any bull and bear traps. Thank you so much for attending this webinar. As I said, I'm happy to take any questions, and we'll be running this 1 minute disclaimer for compliance purposes. You can find a recording of this webinar on the forex.com LinkedIn and the YouTube Middle East pages for any questions or to also watch the webinar again. Thank you for attending, and we'll meet in the next webinar.